Hi, continue from the previous video. I've talked with gift letters. Private mortgage insurance. This type of insurance protect the lender in the event that the borrower is unable to make the mortgage payment. It is paid by the borrower and generally runs from 0.3% to 2.0% of the amount of loan, depending on the down payment level. With the private mortgage insurance, many lenders will allow you to borrow more than 80% of the appraised value of a home if you have this private mortgage insurance. Next, you have a pre-qualifying. Although your ability to pay, in addition to the level of funds that you have available for a down payment, should give you a realistic idea of how large a mortgage loan you qualified for. It is a good idea to have this amount confirmed by seeing a lender or pre-qualifying for a loan. To do so, ask a lender to determine how large a mortgage it will lend you and provide you with a letter stating its willingness to lend you to this sum. Pre-qualification lessens the uncertainty surrounding what you can and what you can't spend, making you a more attractive buyer to potential seller. Third step, make your purchases. Compare between shops. Make sure you get the best price. Traditional real estate agent, independent or exclusive buyer brokers, you can choose from them. Okay, you can actually make your purchases from traditional real estate agents or independent or exclusive buyer brokers. Get it in spec, make sure everything is in good condition, make an offer and haggle with it. Yeah. Get the contract, read the contract, and then earnest money and closing or settlement with the closing statement. Okay, and maintain your purchasing. How do you maintain your purchasing? You can by financing, continue financing, or you can also do refinancing. Okay, for a certain period of time when you need an additional money or you wanted to do renovation, you can go to the bank and ask what is the value of the house, and you do refinance the house, taking your home as a collateral. That's what they do. Okay. As a summary, you need to separate needs from wants, compare product, negotiate, maintain the product, and resolve complaints. Yeah? If you do have complaints, there is a way of you to do your complaint. And lease or buy a vehicle that fits both your personal and your financial needs. Choose housing that meets your needs. Pre-shop, comparison shop home, and also financing. And maintain if you purchase it. You got to maintain the house if you purchase it. Get the most out of a mortgage home. Yeah. Get to ask a lot of questions about the house, about the finances, and so on. This is the status of non-prime loans originated from 2000 to 2007 as at December 31st, 2009. These are the status: completed, active, and prepaid, and unknown status. Okay, house checklist for buyers and sellers. If you are buying a house, when you're deciding what you can afford, remember those numbers are meant as a ceiling, not as a floor. I mean to say that's the maximum that you can pay. If at possible, try to avoid the need for private mortgage insurance by putting down at least 20% of a home cost. When you're looking at what to borrow what you need, not what you can. Many times lenders will offer you the maximum you can borrow. Just go for what you need. This is a trick. They want you to pay longer. They want to earn more interest from you. Understand how your real estate agent is being compensated. Generally, it is through a commission, which means the more you pay, the more they make money. This is a worksheet for refinancing. You see here, monthly benefit from refinancing. The present monthly mortgage payments is 952.32. Mortgage after refinancing, because refinancing usually has a lower interest rate, so it reduces the monthly payment. Yeah, but it increases the longer the months. Yeah. Okay, refinancing might be a good idea if you want to get out of a high interest rate loan to take advantage of the lower interest rates. This is good. Yeah, you intend to stay longer, intend to stay in the house long enough to make additional fees worthwhile. This is some of it. You can read the rest. Early warning sign: avoid any lender who tells you to falsify information on the loan. This is a bogey lender, so do not do this. Yeah, pressure you into applying for a loan or applying for more money than you need. This is not a good lender. Pressures you into accepting monthly payment that you cannot make. Eventually you will fail to pay, and you will be given the legal actions, and fail to provide required loans disclosure or tell you not to read them. That's dangerous. Read the rest. Yeah. Alright. As for exercise for this week, this is a discussion case. You read this discussion case and answer these questions. Okay. Alright. You'll be given a week to do this, and you can submit it via WhatsApp. This is an individual work. Okay. Thank you.